I think that the interest rate environment right now in the U.S. and the quantitative easing policy environment over in Europe strongly argue for a rise in the value in the U.S. dollar vis-a-vis the euro currency. Our economy is continuing to improve when you look at the latest data on jobless claims, Philadelphia Fed, retail sales, and so on. They all point to an improving economic environment in the United States, one that seems to be picking up more speed than what you see in Europe. Meanwhile, the U.S. Fed is clearly getting out of the quantitative easing game. They've already tapered QE by $10 billion in 3 steps, and I think they're going to continue to do that. That also advances the date at which they'll be forced to raise short-term interest rates. So I think that is the situation in the U.S., and it contrasts with what's going on in Europe, where inflationary pressures have been receding. If anything, deflationary pressures have been growing, and the central bank over there is getting increasingly pushed towards a situation where it has to launch quantitative easing or ramp it up. And therefore, I think in this situation, you want to be looking at being long the dollar against the euro currency. I think that we're definitely peaking out in terms of momentum for the euro currency. It's had its day in the sun, and now I believe it's the dollar's turn. You can see from some technical indicators that it's beginning to roll over, and I believe the date at which the ECB, the European Central Bank, rolls out quantitative easing is getting closer and closer. And as that step takes place, whereas the U.S. Central Bank is pulling back, it's going to increase the pressure on the euro currency, ultimately driving it down, in my view, to at least 135 against the dollar, and in a worst-case scenario, all the way down to 130. Well, the simple fact is you can buy ETFs now, exchange-traded funds, which allow you to profit from movement in major currencies, including the euro. If you wanted to go long the dollar against the euro, or in other words, if you want to position yourself to profit from a decline in the euro, you can buy the ProShares Ultra Short Euro, ticker symbol EUO. EUO is a leveraged ETF designed to rise 2% in value for every 1% decline in the value of the euro currency against the US dollar. I think it's a great investment if I'm right and the euro currency is ultimately headed for tougher times. This is Mike Larson with Money and Markets. Thanks for listening.